SteadyTrade Treats fans, howdy. It's Bryce back here with, a treat for you guys. For those of you who haven't heard, Michael Burry, the guy who essentially predicted the 2008 crash, apparently is now on Twitter and gave his insight on what he thinks this current market is like, and he is very bearish on it. Again, this account isn't verified or anything. It has been around since 2011, so it's not like he made it last night and is just some imposter. He could be, though. He could be an imposter. Now, the tweets have since been deleted that he put out. However, I screenshotted them because I thought they were interesting. Thankfully, I did. I've got them right here on my phone, and we will put these up on the screen so that you can see. We'll also put his Twitter handle up here, Michael J. Burry. So let's get right into it. Again, this is apparently the guy that predicted the 2008 financial crash, made hundreds of millions of dollars on it, and basically that was it. So what he says here in this tweet thread was that the U.S. government is inviting inflation with its MMT-tinged policies, brisk debt, GDP, M2 increases, while retail sales, PMI stage V recovery. Trillions more stimulus and reopening to boost demand as employee and supply chain costs skyrocket. Hashtag paradigm shift. Then he goes on to quote a reading about the Germany economic crash back right after they lost World War I think it was, and compares very, very notable similarities between that and the U.S. market. One of them being, let's see. All right, here's a fun one. Almost any kind of business can make money. Business failures and bankruptcies became few. The boom suspended the normal process of natural selection by which the non-essential and ineffective otherwise would have been called out. We got GME. Same thing, right? Bankrupt company, all of a sudden worth $500 a share. TSNP, a company with $140,000 in net assets that had a max market cap of almost $2 billion. Similarities. Another one. Let's see. Speculation alone, while adding nothing to Germany's wealth, became one of the largest activities. The fever to join in turning a quick mark infected nearly all classes. Everyone from the elevator operator up was playing the market. Let's see, and one more. The volumes of turnover and securities on the Berlin bourse became so high that the financial industry could not keep up with the paperwork, and the bourse was obliged to close several days a week to work off the backlog. Hashtag Robinhood down. The brokers were having issues keeping up with the demand. But the point is, apparently it's very similar. Now, that being said, there is a notable difference. We did not lose a world war, and we're not in a financial ruin like that. However, that being said, COVID was a really hard blow on the global economy and especially the U.S. economy. Now, the market is at all-time highs. Wait a minute, why is it at all-time highs, right? I personally don't believe the economy is better off than it was pre-COVID, yet we're 20% higher. With all that being said, this came out, I think, a few days ago. I personally am a little bit bearish on this market. I think we are extremely high up for where it should be. And I personally believe the market always will fundamentally correct itself. Whether, you can argue that, as long as people are buying, that's where price should be. Yes, in short term, long term, I think fundamentals always win. And again, Michael Burry's entire argument was that we are possibly heading towards hyperinflation. And think about it, it kind of makes sense, right? The U.S. market right now, the whole point of these stimulus checks was to provide short-term demand for the U.S. economy while people weren't making money. However, it seems like that is people are almost relying on that. And especially, you can only provide so much stimulus. The more you provide, the more you inflate, and the more you inflate, well, the more you have markets up at all-time highs when the economy really isn't that well off. And on top of that, the stimulus money is also a lot of people are going to trade with it, invest with it, and they're pushing these bankrupt companies who should not have that money with billions of dollars. They're pushing them up really far. That's not adding anything to the economy either. In my opinion, we are definitely inflated. Now, of course, healthy inflation is a good thing, but when it becomes unhealthy, it is a little bit concerning. I don't know, he's a very smart man. If that really is the real Michael Burry, he's a very smart man. But to each is their own. These are just my thoughts. Like I said, I'm slightly bearish on the market while it's up this high, but Who knows? I want to know your guys' thoughts in the comments. Is Michael Burry right on this? If this is him, is he right? Do you guys agree that the market is hyperinflated? I think he's got some valid points. I don't know if that means we're going in for a massive bear market, but I think the market will definitely correct itself at some point in the future. I will be back here on Friday with your guys' Friday's edition of Steady Trade Treats. And until then, stay safe in the markets, guys. Peace out.